Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Azamiddin bin Dahari. Today I would like to present about introduction sustainable finance. Sustainable finance integrate ESG, environment, social, and government factor into the investment decision, directing funds towards a project that generates positive environment and social outcomes such as renewable energy and affordable housing. For example, in Kedah, that's house, electric house, because it's important to the people local in Kedah. And then within the framework, Green Sukuk has an emergency in Islamic finance instrument dedicated to financing co-friendly innovative like renewable energy and green building, being Shariah-compliant. They avoid the riba, non-halal compliant activities, while the assets sought to ensure transparency by linking the investment to real project and creating investor in ownership in financial assets.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Faris bin Yusuf Zaki, and I will be the next presenter. For this section, I will explain the operational flow of Green Sukuk. Green Sukuk is a Sharia-compliant financial instrument used to fund environmentally friendly projects such as renewable energy, green buildings, and green transportation or clean transportation. So, the first, a company needs the funding for a green project will create a special purpose vehicle, or we call SPV. The SPV acts as an intermediary to manage the sukuk funding or used properly. Next, the SPV issues Green Sukuk certificates to investor, and investor provide capital for the project, and in return receive profit generated from the project according to Shariah principle. After the project start operating, the income generated will be distributed to investor through the SPV. Finally, when the sukuk reach maturity, the investor will receive back their original investment. In conclusion, Green Sukuk help finance sustainable project while ensuring compliance with Islamic finance principle. Alright, we go to the scope of the study. For this part, I will explain the scope of the study. This study focus on market risk in Green Sukuk within the Malaysian Islamic financial industry. Green Sukuk is used to finance environmentally friendly projects such as renewable energy, green building, and clean transportation while following Sharia principle. The study examines how market risks such as change in profit rates or foreign exchange rates and commodity prices can affect the performance and stability of Green Sukuk in Malaysia. Since Malaysia is the one of the leading countries in sukuk issuance, this study is important for understanding the challenges faces by investor and Islamic financial institution. The study also discuss way to manage market risk, including diversification and Sharia-compliant hedging. In addition, institutions such as Bank Negara Malaysia, Securities Commission SC, and Bursa Malaysia play an important role in supporting the green sukuk market. However, this study has some limitation because it's only focused on Malaysia and mainly discusses market risk. Limited data and changing financial regulation may also affect the finding of the studies. Alright, for the last part of my presentation, I will explain the relationship between interest rate and sukuk prices. The relationship is generally inverse. This means when market interest or profit rates increase, sukuk prices usually decrease. When market rate decrease, sukuk price usually increase. Even though sukuk are Shariah-compliant instrument and do not involve riba or interest, their returns are often benchmarked against market rates, such as London Interbank offered rates or LIBOR. Because of this, changes in market rates can still affect sukuk price. For an example, an investor buys a sukuk worth RM1,000 with 4% annual return. This means the investor receives 40 ringgit per year. Later, market rates increase to 6% and new sukuk offer 60 ringgit return per year. Investor will prefer the new sukuk because it have a higher return. As a result, the price of the older 4% sukuk may decrease below 1,000. In other hand, if market rates fall to 2%, the existing sukuk that's 4% return become more attractive, and more investor will want to buy it, and cause the price increase above 1,000 ringgit. In conclusion, change in a market rates can strongly affect sukuk price and investment value, making market risk an important issue in Islamic finance.
Proceed to impact of interest rate fluctuation on fair value of green sukuk. So first of all, green sukuk are Islamic financial instruments issued to finance environmentally sustainable projects such as renewable energy, green buildings, and also clean transportation. So according to Wahab and Muhammad Saad, they said that sending money for renewable energy investment is an example of sukuk responsible investment, while individuals want to strike a balance between profit return and environmental conservation. So here we have diagram 2, which is from Green Sukuk issued in Malaysia, issuance, size, use of proceed, and environmental qualification. So let's see July 2017 from the issuer of Tadau Energy, which is the size of issuance is 250 ringgit Malaysia, which is the profit rate is less than October 2017 by the issuer from Quantum Solar Park, which is the size of issuance higher than Tadau Energy. So from here we can see that the profit rate from July to October can be higher than from October can be higher than July. So it means that the profit rate increased by 800 and 750 ringgit from October and July. So the price is decreased by 750 ringgit. So this occurs because investors find all the sukuk with lower yield less appealing because newly issued sukuk provide better returns or profit rates. Duration and sensitivity analysis. So duration and sensitivity analysis are important instruments for managing risk in the finance industry due to their capacity to measure how changes in market variable, especially interest rates, affect the value of securities like bonds and sukuk. So the process of determining how sensitive a financial instrument's fair value is to changes in interest or profit rates is referred to as duration analysis. So it also measures the amount of time it will take the investor to receive the investment from cash flow generated from the financial instruments. So on the other hand, sensitivity analysis involves studying the effect that changes in one variable have on the financial performance of the asset. So sensitivity analysis is often applied by financiers when studying the impact that changes in inflation rates, interest rates, currency rates, or overall market condition may have. So for the example of duration and sensitivity analysis calculation, for duration calculation, assume that sukuk has a modified duration between in 5 years. The interest rate increase 1% over a year. So for the formula, we use modified duration multiplied by change in interest rate. So the amount is -5 multiplied by 1%, so equal to -5%. So this means that if the interest rate increased by 1%, the sukuk price will decrease by approximately 5%. So the actual value, we assume that 10,000 ringgit. So the price decreased 5% over a year. So 5% multiplied by 10,000 ringgit Malaysia. So the price can get RM 500 ringgit. So the price before is a total of 10,000 ringgit. So the price after is 9,500 ringgit. So next example of analysis sensitivity calculation. Assume that a bank has a sukuk portfolio worth RM 1 million ringgit. So the portfolio duration is 4%. So the formula is change in portfolio values equal to -4 multiple by 2%. We can get negative 8%. So 8% multiple by 1,000 ringgit, and we can get 80,000 ringgit. So the original value is 1 million ringgit. So the price loss is 80,000 ringgit. So the new value is RM 20,000 ringgit. So that's all from me.
For this part, I will explain how macroeconomic factors influence market risk. There are three main factors, which are OPR, inflation, and monetary policy by Bank Negara Malaysia. First, OPR affects interest rates. When OPR increases, borrowing becomes more expensive. This reduces investment and causes asset prices to fall, which increases market risk. On the other hand, when OPR decreases, investment increases and market conditions become more stable. However, too much liquidity can also create the asset bubbles. Next is inflation. High inflation increases production costs, especially in sectors like renewable energy. This reduces company profits and causes price fluctuation, which increase market risk. Lastly, monetary policy also plays an important role. Tight policy reduces liquidity and investment, while expansionary policy encourages investment, including in sustainable finance. Overall, these macroeconomic factors directly influence market risk through interest rates and liquidity. Now, I will explain the implication of market risk on sustainable finance. Firstly, market risk affects investors when the market is unstable, asset prices fluctuate, and this reduces investor confidence. Because of this, investors need to diversify their portfolios and focus on the long-term investment. Although ESG investments are more stable in the long run, they are still affected by short-term market changes. Secondly, market risk also affects the growth of sustainable finance. When conditions are uncertain, investors may avoid funding green projects. This leads to limited financing and slows down the development of a sustainable economy. Finally, institutions like Bank Negara Malaysia also play an important role in maintaining market stability through policies and regulations. In conclusion, even though market risk creates a lot of changes, it can also still be managed with the right strategies and strong support from the authorities.
Bismillahirrahmanirrahim. So now we move to case study. In 4.1, we choose Malaysia as the focus of the case study because Malaysia was the first country to introduce Green Sukuk in 2017. This development shows that Malaysia is a major Islamic finance ecosystem that is able to combine Sharia principle with sustainability goal. A key example in the Green Sukuk issue by Tadau Energy worth 250 million ringgit. The proceeds from this sukuk were used to finance a large-scale 50 megawatt solar project power in Kudat Sabah. Besides Tadau Energy, companies such as UiTM Solar Power and Pasukas Group also issue sukuk to finance projects related to solar energy and waste management. In short, Green Sukuk is not only a Shariah-compliant financing instrument, but also an important tool to support renewable energy development and Malaysian transition toward a low-carbon economy.
Next is 4.2. The main focus is the impact of OPR change on the price and return of Green Sukuk. In Malaysia, the OPR is set by BNM to control inflation and maintain economic stability. Although Green Sukuk does not involve riba, its market value is still affected by benchmark rate, such as OPR. When the OPR increases, newly issued sukuk or other financial instruments usually offer higher returns. As a result, existing sukuk with lower coupon rate become less attractive, causing their market price to fall. Therefore, the relationship between interest rate and sukuk prices is inverse. Thus, the price of existing sukuk will fall in the secondary market so that its return become more competitive with the current market rate. From the investor perspective, this situation may lead to a capital loss if the sukuk is sold before maturity. On the other hand, if the OPR decreases, sukuk prices usually increase and investor may gain a capital gain. So, even though sukuk is linked to its sustainability, investors still need to understand interest rate risk and change in monetary policy.
In 4.3, to show the impact of rate change more clearly, we can look at a simple calculation. Assume that a green sukuk has a nominal value of 1,000 ringgit, a coupon rate of 4%, a maturity period of 5 years, and a modified duration of 4 years. The market rate increases by 1%. Estimated price change can be calculated using the formula of price change equal to negative modified duration multiplied by change in rate. So, negative 4 multiplied by 1% equal to negative 4%. This means the sukuk price is expected to decrease by 4%. If the original sukuk value is 1,000 ringgit, the new value will be 1,000 ringgit minus 4% equal to 960 ringgit. This simple calculation shows that when market rate increase, the value of sukuk will decline. This is why change in OPR can significantly affect investors, especially if they sell the sukuk before maturity. Lastly, 4.4. Based on this case study, there are several key findings. First, the green or sustainable status does not make green sukuk free from market risk. Although the funds are used for environmentally friendly projects such as solar energy, sukuk prices are still affected by OPR, economic condition, and market demands. Second, transparency is very important. If there are issues of greenwashing or unclear sustainability claim, investor confidence may be affected. Therefore, sukuk issuer need to provide clear report on the performance of their green project. Third, risk management must be part of sustainable finance strategy. Tools such as modified duration and scenario analysis can help investors understand the impact of rate change on sukuk price. In conclusion, green sukuk has strong potential to support Malaysia's sustainability agenda. However, its success depends on the market ability to balance environmental goals with the effective finance risk management.
For the conclusion, overall, the main finding indicate the market risk has a direct impact on the performance and attractive of a green sukuk. Fluctuation in the interest rates, change in the rate of the refund return, and instability in the financial market can affect a market value and investor confidence. Although green sukuk offers advantage in the term of sustainable of a Shariah-compliance, as it remains exposed the market risk that may reduce profitability and increase investment uncertainty.